I think the most important thing that has happened, Steve, is the consistency of messaging, which we haven't seen for a while. And that consistency has all come down to HFL, higher for longer. And the more Fed officials repeat it, the more the market is pricing it in, but it's mainly the fixed income market so far that has priced it in. Other markets are still hoping somehow that we are in a cyclical moment, not in what I think is much more secular and strategic.
There's a big lesson here, and again, I asked the question before Jackson Hole, and I think we got the answer. What on earth was the market expecting from Jay Powell? And it was very clear what they wanted. They wanted the pivot. They wanted interest rates to peak in early to mid-23 and then start coming off again as well. Why? There's a lesson here for all our viewers. Why did the market get it so badly wrong when even commentators like myself, humble commentators like myself, and experts like yourself never saw a pivot coming?
I think three reasons. One is the mindset. The market has seen the Fed blink before. Okay. Fourth quarter of 2018 was an example, but there's been lots of examples of this Fed blinking. Second reason, the message wasn't consistent. It was yes, but. We're going to tighten, but. And then the third is self-reinforcement. That's what we want to hear. And we, the behavioral scientists will tell you, we tend to frame things the way we want to hear it. So the minute you hear the but, you focus only on the but.
That's absolutely fascinating, and behavioural science is just such an important part of this. Do you think the market believed that it was the dog wagging, or the tail wagging the dog, i.e. we can force, by creating an element of doubt in terms of pricing of various asset classes, we can force the Fed into a decision?
Oh, absolutely. I don't think there's any doubt that the market has held the Fed hostage for a long time. What has fundamentally changed is inflation. Once you bring in an inflation rate of 8.5%, suddenly the ability of the market to hold the Fed hostage dissipates. And that's what I think the market is starting to realize. This is not the old days. Inflation has fundamentally changed the equation.
Yeah, and for a large, I was going to say most of, but a large part of your career running vast sums of fixed income as well, it's been a one-way track as well. And then suddenly from, well, the likes of Peter Oppenheimer at Goldman's in the early teens, and suddenly started saying, hang on a second, this is going to change. But it took much longer than any of us expected for that change to happen as well. Is the market now, no, let me change that. Are central bankers now correctly reacting to the inflation threat?
So it depends which central bankers. We tend to focus on the Fed, and I think the Fed is correctly reacting in messaging, but hasn't done two other things that it needs to do. One is explain to the marketplace why it got its analysis so wrong and what has it done about its forecasting abilities. And secondly, change its framework. Remember, we still have a framework that is for a world of deficient aggregate demand, and we're in a world of deficient aggregate supply. So for the Fed, I think it's clear. Once you get away from the Fed, the degree of difficulty gets much, much higher.